So, Tom, inflation figures this morning, 3%. What are your thoughts?
Morning, Ali. Yeah, pretty strong print. I think lowest in nearly a year, reinforces market expectations that Bank of England are going to potentially cut at the 19th of March policy meeting. A cut from 3.75 to 3.5. Yeah, in real terms, it's not going to affect lending rates like drastically, and is going to have a pretty big impact on yield. But really, we're seeing the pressure flow into currency movement. I think sterling under a lot of pressure against the dollar and the euro after pretty poor unemployment data this week, lowest since 2021. A lot of the market pricing in potential Bank of England action next month on the back of that, plus a 3% figure this morning really makes sterling a slightly weaker proposition. There's a quite a big divergence now between monetary policy between the three central banks, the Fed, Europe, and the UK. And I think the market's going to watch that over the next 3 months to see what happens for the rest of 2026. But when we look at UK inflation, the core services inflation is still above target, meaning that while we might get an easing of interest rates next month, the scale and the pace of those cuts is likely to remain linked to that core and services inflation data moving forward. And that sort of uncertainty can really keep FX volatility elevated. The market will continually reprice based on its thoughts and feelings around those services and inflation and what the Bank of England will do about it. So I think a little bit of sort of volatility over the next couple of weeks. Good to see the number coming down back towards 2% target, but sterling definitely seeing a little bit of weakness on the back of that.